How important is it that we do see some kind of stimulus bill to prevent another wave of bankruptcies?
Massively important. It's not just for bankruptcies, it's for the overall health of the economy. What's been happening, and I heard some of the earlier commentary, Lazard did a survey of health CEOs and investors. The results of that was that we don't expect a widely available vaccine until the back half of 2021, not the front half of 2021. In the meanwhile, there is significant ongoing economic damage from the pandemic that has been hidden to date by substantial government support to the economy, so substantial that credit card debt has declined and saving rates have increased. As that is withdrawn, the underlying economic effect of the pandemic itself becomes more manifest, and failing to do another round of stimulus, I think, is going to lead to a lot of pain in November, December, and January, because the underlying economic impact from the pandemic is still there.
Why hasn't that pain emerged already then, Peter, given that the first significant stimulus has already expired?
Again, because that was so substantial that it provided a big cushion for families. They were able to actually build up savings to reduce their credit card debt. And we're still seeing the after effects of that phenomenon. It's almost like we're the road runner that has run off the cliff and we haven't seen it yet. So at some point over the next month or two, that accumulated savings cushion will be exhausted for most families, and the lack of new ongoing government support is then going to be the problem. So this is a very odd situation where the incoming jobs numbers last week, the job openings numbers this week, those are all very positive, but that's mostly a lagged effect of the very substantial government support that has been provided. And even though that's ended, families are still able to live off of the accumulated savings because that was so big.
So we started by you sounding the alarm a little bit, Peter, on retail bankruptcies. Why do you think that the broader market hasn't really paid so much attention to the ripple effect that could have on the economy with jobs, with commercial real estate? I mean, we're getting now CNBC has learned that mall owners Simon and Brookfield are set to rescue JCPenney from bankruptcy. How should investors feel about these troubled landlords having to rescue their bankrupt tenants when they themselves are facing so much pain?
Well, look, I think retail, you won't be surprised to hear we're not going to talk about specific Lazard clients or specific firms, but retail, broadly speaking, follows that consumer trend. And so when consumers are in trouble, retail suffers as a result. And it comes back to the same phenomenon that we were talking about earlier. Now, why is the market where it is? I think that's largely the result of a few things, including very substantial monetary stimulus that has reduced the discount rate that's applied to corporate earnings, and perhaps, and this is where it gets tricky, and perhaps some degree of undue optimism about the timing of when a vaccine will be widely available and will be out of the woods on this particular pandemic.
Are you concerned, Peter, by the size of the growing national debt and deficit? And is it important that the dollar remains central reserve currency of the world in order to offset that over the long term?
I'm not particularly concerned about U.S. debt and deficits, nor am I particularly concerned about European debt and deficits. For the advanced economies, there's a lot of demand for the debt that they're issuing. That is a mirror image of this very significant monetary expansion that we just mentioned. Where there is a problem, however, is in many emerging markets. So there recently, and here I will mention some Lazard clients, sovereign countries from Argentina to Ecuador facing very substantial fiscal pressures and sovereign debt crises. And I think we are going to see more of that in the future because those countries that often have to borrow in foreign currency, not their own currency, there is a public debt problem. But for the United States and for most of the countries in continental Europe, now is the time to be doing massive fiscal expansions to offset that economic pain that we were discussing earlier from the ongoing pandemic.